For the last 2 weeks, Bitcoin's been stuck in a trading range, trading above $116,000. And through this period, we've seen a lot of altcoins begin to pop off. We've seen it on the altcoin crypto market caps. We've seen it with Ethereum pumping up to $3,800, XRP into new all-time highs, along with many other altcoins. However, each time we see this in the market, we get an absolute freak out from new entrants. What am I talking about? What is the market doing? This is the correction that we saw in the last 2 days for XRP being 16%. Ethereum's also had a pullback at this time after hitting resistance at $3,800. So today's video, I want to discuss what generally happens before the prices rip. Now we've got a few data points to look at today, so don't go anywhere. Hit the like button, subscribe to the channel if you're new here. All right, guys, let's have a look at this particular line here, the average true range. Now, if I squeeze the chart up, we take a look at what this does. Essentially, the average true range is the price range of the bars, and we're looking at a 14-day average. So when we see these averages increase, the number on the side here is the price of the bar. So in the case of February 24 into March 24, the bar length went from $1,700 up to nearly $4,000. So that's what the main focus of this first piece of analysis is about, looking at that average true range. Now, our daily videos cover many detailed charts, data, indicators, and our forte, the cycle analysis, to help guide us through the investment cycle. So if you're a brand new subscriber to the channel, then I highly encourage you to get our weekly reports on Bitcoin, altcoins, and the economy, including the real estate cycle. They're easy to read in under 5 minutes each, making them extremely digestible for all investor levels. There are 3 reports coming your way starting your week from Tuesday. It'll get you up to speed on how we forecast the markets and how we've been able to profit during uncertain times leading into and out of the cycle peak. It's completely free, so subscribe today using the link in the top of the video description and you'll receive your first report shortly. The average true range typically consolidates before the prices begin to rip. We haven't seen an absolute rip out of the average true range like we've seen, or like we did see through November into December of 2024 when we got to that new all-time high price. We also saw it briefly when the market collapses because the bars are getting bigger as the markets collapse. So that was the largest time we've seen so far at $5,000. But generally we'll see it when the markets begin to break out. And that's generally caused by more buyers coming in. As you probably noticed over the last couple of weeks, there's definitely been an influx of new people to the market. If that happens to be you, don't go anywhere. Make sure you do have a strict plan that you're following. If you don't have a strict plan, I suggest checking out TIA Premium. We have a sale going on this week. Link is in the top of the video description. Plus, you'll get all the free reports. Now, I emphasize that because like many experienced traders that have been through the cycles, they understand that if they don't have a plan, they can get swept up buying all of the peaks and then selling all of the troughs, or even worse, continuing to put money in on the way down, not understanding many of these pretty simple basic signals that identify when the markets are getting a little overheated. And in the case of the correction that we saw in the last 24 hours on many of the altcoins, we can see that, at least for the time being, it doesn't seem like it's anything serious in terms of a crash that ends the cycle. In some cases, for many of those minor altcoins, it could be. But for the major stuff that we're looking at here, like Bitcoin, Ethereum, XRP, we haven't got to that stage yet where the markets have completely broken structure. And that's also what we're looking for, a breakdown in structure to identify if the top is in. So as I look at the average true range, looking back at each of the times that the market breaks out, you can see that there is a consolidating move with the average true range, bit of a low, and then it starts to break higher relatively quickly. That doesn't mean that you have to get on exactly at the point that the market is beginning to break out, because it often gives you multiple entries and chances to get into the market if you're watching these signals. And of course, the same sort of thing happens towards the top. You start to get a flattening out of the range and more consolidation until the thing begins to roll over. And you can see this with the ranges between the tops as an example. So the high to the high, it began to get less and less, meaning there was less entrants coming into the market and less buying going on. That started to give a slowdown of the momentum that led into the final peak, and then the signals that, of course, we watch for, like a 3-bar down rule, which I've got coming up in a sec on another stock heavily correlated to BTC. Might want to take a guess at that. But looking at the average true range, we've got the consolidations, some peaks, falls back again, more consolidations, and then as it starts to run, that usually leads into those final peaks. Like you can see with this time, as the market collapsed with huge bars to the downside, it basically spiked with the average true range. So the range of the bars got the biggest as the market collapsed. And so we're not necessarily there yet. I think it will happen again, just like we saw here in March through to that April low. The bars on the way down extended. We got long, big moves there, and that, of course, pushed the average range of the bar up. It looks like we've gone through a consolidation, and at the moment, it's attempting to push into higher prices. So what I'd like to see here for the bullish momentum is for the average true range to break out of the resistance level, roughly around $3,000 to $3,200. That would probably give us that next explosive move that a lot of people wait for in the markets. If you're waiting for it, great. We haven't got any breakdown of the structure. We haven't had this whole explosive move yet. It's basically been a slow grind with kind of like a stealth move to the upside, because we haven't necessarily seen a lot of traders and new money come into the space, even though the prices continue to climb higher. It really happened around these dates here. You got the Thursday and the Friday, 11th of July. That's when we saw a lot of new people come in. We saw ETF flow spike. We saw greed hit extreme greed for the first time in a long time, all the way back to 23rd of May. That was one hit. And prior to that, with a consistent reading in the extreme greed, we had to go all the way back to November and December. So we haven't gone through this period yet of extended extreme greed. And it seems to be consolidating, even if we do have some pullbacks to support levels. So that's a look at the average true range. We'll continue to use it as well. I suggest also having a look at it yourself to get an idea of how it works. And if you start to see a breakout above resistance, it could be getting ready for that next explosive move to the upside. You can obviously change the settings, but for now, 14 seems to be a nice sweet spot where you get a true breakout and that swing start to break up. It's not going to be the exact bottom of the move. That's other signals that you could possibly look at, but we're trying to get the momentum and the momentum breaking out to those new highs. So the average true range looking good. Now, the crypto fear and greed index, as I said, hasn't broken into extreme greed. So that's another good sign that the sentiment continues to support where it is. Getting a reset of my computer and a reset of the sentiment here with the sort of patchy internet over here in the Mentawais in Indonesia. But the resetting continues as well with the leverage getting wiped out. Nearly 800 million. So basically $750 million of leverage getting wiped out in the last 24 hours. That was 600 million on the long side and just a little bit here on the short side. So the resetting as well from all of the leverage folks that are getting trapped into their positions is a good sign for the bull market, especially as it continues to hold up above the bull market structure. ETF inflows have also been dropping off and going into the negatives over the last few days. I think that's a relatively good sign, especially where the market sits at these higher prices. We did see some extreme levels of inflows come through. The market began to pause at those levels. So these extreme levels are 10th and 11th, just like I showed you a second ago with the extreme greed. You got 10th at 71 and the 11th there, and the reading for the 11th comes in on the 12th. So that's how that sentiment works. And that came in at 79, giving you the extreme greed for that single day. Yep. And now we consolidate. So we're getting a reset here, a reset on price, reset on the average true range, and a reset on the crypto fear and greed index. A reset on the leveraged folks getting wiped out, and ETF inflows also beginning to reset here. You can see a little bit sold off. And so that's why I've titled it something around this is what happens before those big moves, the big rips, and the market beginning to consolidate yet again. And of course, there are still going to be pullbacks in the move. We don't just go straight up. You can see on the side here, negatives at the moment as the day has reset, a few percent off at the moment. Another factor to consider leading into these big rips to the upside and the final legs is the Elliot Wave that we've been tracking at the Investor Accelerator for a number of years, going back to 2022. This is Michael's video here, August 2022. He brought this to us. This was 3 years ago. Sorry if anyone listening on their headphones. 3 years ago, ripping into these final highs. Wave 1, 2, 3, 4, and 5 being the end stage, running out of time. Yesterday's video, I talked about timeframes, looking towards this year at some point. Now, if my chart resets, I'll be able to show you this in a sec. These are weekly timeframes, but nonetheless, the rest of the markets are also looking good. TradFi also 76 in extreme greed. Another reason why I don't think it's time yet for Bitcoin to absolutely collapse. I think there's still more money on the sidelines waiting to come into cryptocurrencies. And you can see it with the stock markets basically trending around this extreme greed now. It will have to cool off eventually, but I think a lot of traders are still waiting for it to cool off as it continues to grind higher. This was the Israel-Iran bombing missiles on the 13th of June. We've come a long way from that point. There was 1 day to the downside on that news, and here we are at new all-time highs. Yes, you're probably getting sick of me saying it. I've been saying this for years on the channel. New all-time high prices yet again. Last 24 hours for the S&P 500. It's also up 8% since the missiles were first shot through those next 4 days as I made videos. The response was, this time is different from a lot of folks viewing. They've obviously disappeared. You don't see about them anymore in the comment section. And hats off to you if you were one of those people and have now seen what the markets actually believe to be the case when it comes to investing. So if you've changed your opinion and changed your mind after you've seen this, that is a good thing. That's what you have to do when you trade and invest. It's pointless to stick to one fixed viewpoint because it's probably going to lose your money. You have to be flexible. So yeah, with the people that thought this time is different, missiles, it's never happened before with Iran, and that could be a reason that we head to World War III and a collapse. That was probably the weakest correction that the S&P has ever seen on any sort of missiles and wars in the Middle East. We saw major corrections or larger corrections than that throughout the last few years. So I digress, just talking about new all-time highs and wall of worry news headlines for the market as it keeps pushing to new all-time high, new all-time high, new all-time high. Not so there, but then today, another new all-time high. Same sort of thing for the Nasdaq, new all-time high daily closing price, and it was just a couple of points off a new all-time high price as well, but it may get there today. And the cycle that we're tracking here to the upside is the 5-year cycle. It is pretty well on track here, just falling a little short at this point, but what I'm mostly concerned with is the structure or the pattern that is forming over the next month. And just keeping this really at the front of our minds is that there is a consolidation period coming up after such a significant grind. Now, it could be an upwards consolidation. That is also possible, like this. You can see through here in June, it's consolidating, but it's slowly grinding higher, and then it pops. That's what I'm talking about. So you can see zooming in and pops up, which to me is another reason why I don't think it's time yet for Bitcoin to top out and come all the way down. And as the chart loads here with the weekly timeframes, although we're getting towards the end of a weekly time frame like has happened in the past, it doesn't mean that it's all ready to come crashing down. It might be time for a consolidation and a larger correction than what we've seen on the way up. Ideally, we continue to hold roughly or at least above $110,000. As I bring out some more of the lines here, the 110 puts us at the 50% level. So 110,700. That's the current all-time high to the June low on the short-term time frame. And if we took the entire range, our 50% level sits at $99,000, very close to the psychological level of 100. So if we got to either of those points there for BTC down to 110.11, that's about a 10% correction. We know Bitcoin can do more than that. And if we got to the 50%, well, that comes out nearly 20%. So we might still be in for some shallow corrections here before some moves back higher. That's then take out all-time highs, and then we get those larger corrections as we keep working towards these time frames, the weekly moves to the upside coming to an end, just like we've seen throughout this entire bull market. 20 weeks to the upside before there was a pause and consolidation. 17 weeks, only 2 weeks here for a pullback. 7 weeks into the final top, 5 months down, 8 months consolidating. 19 weeks up, consolidation happened over 2 months, then the pullback, and then we're currently sitting at 14 weeks. So it's currently the shortest one so far, excluding this quick run up into that March top after the 17 weeks here. So stock markets, new all-time highs. What else is at new all-time highs? The copper price, new all-time high price, new all-time high daily closing price. Things are still looking relatively good here with the economy, obviously copper being used in the economy. Again, another reason why it doesn't seem like it's time yet for an absolute all-out collapse of everything as we keep hitting new all-time high prices. I've been talking about this day after day, and the US dollar has found its resistance at this point, 98.6, and has been down now for a few days from that high. So weakness in the US dollar, also seeing a strengthening through some of the other currencies. Australia finally hitting 66 cents, the euro's up, the pound's up, the Swiss franc is up, and the Japanese yen is also up on the previous day as well. So not looking great for the US dollar, but I think it's still positives for the market, just like we're seeing with altcoins stretching to new fresh highs. On the 12-month, it has cooled off. So this is the difference, the update from yesterday. It's continuing to cool off on the search terms, which potentially coincides with the pullback that we're seeing within the prices of altcoins. So what we look for next, higher lows to form in the search volume, and then another move to the upside. And if this happens, it could be a mega stellar rip, because we're getting very close to all-time high search volume for altcoins, yet we've barely seen a movement in crypto, but more importantly, barely seen a move in the USDT price, and that was the dominance, and also the dominance of others, which is basically everything in the entire altcoin space except the top 10. So we've barely seen this thing move higher, yet there has been a massive uptick in the search volume for altcoins. Now, I'm also interested in watching crypto because maybe this season or this cycle, more people are looking at the word altcoins than they previously had, and in the past, they used to search for crypto. So that's a possibility that I'm toying with and keeping in the forefront of my analysis. We saw huge moves to the upside here for crypto back in 2021 and then 2022, and then most recently in 2024, getting closer to those highs again. And Bitcoin has been putting in higher highs, potentially coming back for a higher low. Same deal for crypto. So similar sort of thing. This is exactly what tends to happen as the market consolidates at higher prices, potentially extending that move out of the lows, breaking resistance levels. This is across the board on price, and also what we're seeing with the chart patterns on search volumes as well. The daily exchange volume is also up, same sort of pattern. Lows are forming and then highs are being broken. So more interest coming through to the market. And if you are new to the markets, we have free weekly reports going out. Link in the top of the video description. Plus, you'll be on the email list when we have a sale on TIA Premium coming up. With that link, you can also check out all of the trading results from our traders, whether it's short-term, long-term, basically you with your plans, learning how to enforce the rules that you have learnt from Premium and ensuring that you're taking the profits along the way. If you can last in the game, you're going to make it a longer way. And you can use it across everything, stock markets, commodities, and of course, crypto and Bitcoin. It's the same analysis that we're able to replicate on each of the markets. So you just find what works for you. So the stablecoin dominance has also found, unfortunately, a base at the 7-year support level. Now, I apologize for the lag in the data here, but this white line is basically across the lows of the stablecoin market, which has called each of the previous all-time highs for Bitcoin. And you also see it with the USDT dominance. Now, this chart I've got here is the combination of USDT dominance and USDC dominance. And ideally, for the bull market, we want to see this thing begin to break down. So I don't think it's too much of an issue if we're seeing support in the short term here, provided it gets rejected at somewhere around the previous lows, about 6.3, maybe not too much further than 6.5, because then you start to break higher and change the structure of what's going on. But in terms of the others chart, the dominance, it's having a pullback from yesterday after taking out the overbalance in the short-term move here. So we are definitely watching for a larger overbalance in time and price to the upside. 9.8, 10, we've looked at 10.5. There is a big area that this market needs to get above for us to see a huge pop-off of this altcoins, altcoin season. The chance begins at roughly 9%. That's what this chance of altcoin season is. We've seen support before, and then recently it's been rejected multiple times. That to me is the real major altcoin season, what people come to the markets for, or expecting. What's worth the gamble is if we get above 9% and aim to take out the 10 to 10.5, because that would be the overbalance here, and then you could start to see bigger things. There is a lot of resistance at that level. 50% of the entire range is at 9.8, close enough to 10. The overbalance in time of price is at 10.5. So now we're looking between 10 and 10.5. The downtrend that has basically rejected that last move in December to the upside, connected from the all-time high, that also needs to get broken. So you've got a lot of overhead resistance here on the others chart. The total 3 also still holding up relatively well, even though it had a pullback, provided it holds above the $900 to $950 billion. The structure remains intact, higher highs, higher lows forming. That's ideal. Otherwise, you get breakdowns, then it becomes weakness. But any of those sort of moves to the downside are still looking relatively good. ETH, XRP, SUI are still above their 50% levels. I've had to resort to this chart as my internet resets. MicroStrategy has had 3 days down. Now, I don't know if this is a significant top yet, but I'm definitely watching out in case MicroStrategy closes below $360. That's the key level right now. There is a 50% at $390, but the lows are around $360. So across the board, we have seen pullbacks, and pretty wild pullbacks, I guess, for anyone new in the last 2 weeks. If you've been around a lot longer than that, thanks very much. Like the video, and if you haven't, please do subscribe. The movements forward get more volatile. We often see larger swings. We often see pretty sharp reversals, but these sharp reversals generally, while we're still in the bull market, and as we've uncovered here, at least in my opinion, according to my own analysis, we still have time left in the bull market. So these sharp reversals generally resolve themselves to the upside, provided the structure remains above those key support levels. The support levels that we watch, swing lows and 50% levels. None of those are broken down yet. Still looking like we've got further to go. Like, subscribe. The sale is on, beginning in about 24 hours, and the reports will be all out today. I'll see you guys in the next video. Till then, take care and peace out.